Hey everyone! With BlockSonic, you get the top Bitcoin news of the day in a practical, narrated format, so you never miss an important market move. With BlockSonic, you don't need to search for information, we find it for you. Today, the news-generating buzz is the Senate debate over cryptocurrency developer protections. We'll explore how this controversy surrounding the developer immunity bill is shaking up the Bitcoin market. Additionally, banking giant State Street is proposing a financial revolution with blockchain technology. You'll also discover details about the colossal $282.0 million theft that rocked the Bitcoin market. Amidst all this turbulence, miners are thriving while Hashrates plummet, and Bitcoin Cash is driving the cryptocurrency index. And of course, we'll discuss how the future of everyday cryptocurrency payments is shaping up. Stay with us for a comprehensive and thought-provoking analysis of these topics that promise to impact the world of cryptocurrencies. Crypto developer immunity sparks Bitcoin bill controversy. Crypto legal immunity in Bitcoin legislation ignites Senate debates, highlighting blockchain developer impacts. The proposal for the Blockchain Regulatory Certainty Act has stirred the crypto waters, challenging Bitcoin market structure legislation by potentially altering federal money transmitter mandates. In a strongly worded message to their Senate banking counterparts, Judiciary Committee leaders expressed concerns. They firmly asserted that Section 604, aimed at shielding crypto software developers from criminal repercussions when their creations are misapplied by third parties, would erode existing federal regulations regarding unlicensed money transmission. Senators Chuck Grassley and Dick Durbin, representing bipartisan leadership in the judiciary, underscored this point. The Judiciary Committee, wielding authority over legal frameworks like Title 18, was sidelined in preliminary discussions, as revealed in their correspondence dated January 14. This communication referenced the legal proceedings involving Tornado Cash developer Roman Storm, which underscored the efficacy of current statutes in prosecuting parties linked to unauthorized money transmitting activities. This discourse adds another layer of complexity to the crypto market structure bill, initially slated for deliberation and a vote by the Senate Banking Committee. However, facing significant opposition, the session was deferred. Insider reports to CoinDesk highlighted the contentious nature of the Blockchain Regulatory Certainty Act within broader legislative negotiations, with notable Democratic resistance to its inclusion in the latest bill version. Meanwhile, Senators Cynthia Lummis and Ron Wyden have taken proactive steps by introducing the Blockchain Regulatory Certainty Act as an independent proposal. This move hinted at the possibility of it standing apart from the Comprehensive Market Structure Bill. Should the contentious provision persist, the Judiciary panel's involvement would become imperative, necessitating a tri-committee consensus on the legislative package. Proponents of decentralized finance, or DeFi, argue that omitting these protections could erode their endorsement, potentially leading to another legislative deadlock. The letter concludes with a call to action, urging the rejection of any language that could compromise the government's capacity to hold accountable those operating without proper money transmission licenses. We at BlockSonic understand that this legislative debate encapsulates the broader tensions between innovation in the crypto space and regulatory oversight. How will the balance of protecting developers while ensuring compliance shape the future of Bitcoin and blockchain legislation? Share your thoughts and join the conversation in the chat. Banking on blockchain, State Street's crypto revolution. State Street, a $36 billion banking giant, embraces blockchain as the future of finance, leaving Bitcoin in the shadows. State Street, a financial heavyweight with a valuation of approximately $36 billion, is carving out a significant role in bridging traditional finance and the digital future. As it boldly steps forward, the bank is not waiting for the future to unfold on its own. On Thursday, State Street announced the launch of its digital asset platform, a sophisticated infrastructure aimed at supporting tokenized money market funds, exchange-traded funds, cash products, and stablecoins. This platform is equipped with wallet management, custodial services, and digital cash capabilities, designed to function across both public and permissioned blockchains. During the company's fourth quarter earnings call on Friday, Chief Executive Officer Ronald O'Hanley highlighted the financial system's transition into an advanced digital phase, with State Street positioned at its core. He emphasized that this evolution is not focused on cryptocurrencies such as Bitcoin, but rather on re-engineering traditional financial assets like money market funds and cash by integrating them into blockchain to enhance their efficiency within new infrastructures. State Street is strategically oriented to serve as the conduit between traditional and digital finance, acting as the connection among digital asset platforms, O'Hanley stated. In this new financial paradigm, one of the most immediate applications is the tokenization of money market funds, a product that State Street already manages extensively. Tokenized money market funds, he explained, can be used as collateral, facilitate quick settlements, and provide clients with a bridge to a more digital operational model. State Street is not alone in recognizing blockchain's potential to overhaul legacy financial services. Other major banks are pursuing similar strategies. JP Morgan is utilizing its JPM Coin and Onyx network for institutional payment settlements with tokenized deposits. Goldman Sachs has explored tokenized bond issuances and developed its digital asset platform, while Citi is experimenting with tokenized deposits and programmable payments through Citi Token Services, all contributing to a financial ecosystem where traditional assets discreetly transition over blockchain rails. Simultaneously, State Street is preparing for future scenarios that could become integral to financial markets, such as using stablecoins for securities settlements. O'Hanley noted that if stablecoins become a standard for settling securities transactions, such capabilities will be crucial for enabling digital cash to settle traditional securities transactions. The bank's aspirations in the digital asset realm also include a minority stake in partnership with Apex Fintech Solutions, initiated in late 2025. This endeavor aims to expand its wealth services market capabilities, particularly as clients seek to access digital assets and infrastructure. Nonetheless, O'Hanley clarified that the financial returns from these initiatives would not be immediately apparent. It's not really going to be visible in 2026, he stated. It's more of a medium-term issue, but all of the investments we're making now will ensure our relevance and inclusion in the growth narrative over the medium term. He argued that this relevance will stem from infrastructure, not speculation. It truly is about the digitalization of transactions, enabling institutions to transition from traditional to digital finance in a cost-effective manner. We at BlockSonic understand that the financial landscape is shifting, with blockchain technology setting the stage for the future. How do you perceive the role of blockchain in redefining finance? And what impact do you foresee on cryptocurrency adoption? Share your thoughts and join the conversation in the chat. If you believe in what we're doing and want to support BlockSonic's growth, just scan the QR code on the screen or copy the link in the video description. Every contribution makes a difference and helps us keep delivering quality, independent, and up-to-date content for you. Crypto Heist, massive $282.0 million. Theft shakes Bitcoin market. A jaw-dropping crypto theft sees over $282.0 million stolen, impacting Bitcoin and Litecoin prices, while a hacker cleverly launders funds through Monero. A hacker orchestrated a daring theft of $282 million in cryptocurrency, targeting both Bitcoin and Litecoin through a cunning social engineering attack. The incident, as detailed by blockchain analyst Zax EPT, reveals the hackers' strategic move to launder the stolen assets via Monero, utilizing multiple instant exchanges to obscure the trail. The victim suffered the loss of 2,050,000 Litecoin and 1,459 Bitcoin. The stolen Bitcoin was partially converted into Ethereum, Ripple, and Litecoin using Thorchain, as further elaborated by Zax BT. Notably, this attack did not involve North Korean hackers, according to available insights. The breach took place on January 10th at 2300 hours Coordinated Universal Time, triggering a 70% surge in Monero's value over the following 4 days. However, details about whether the victim was an individual crypto holder or a corporation remain undisclosed, highlighting a growing trend from 2025 where social engineering emerges as a predominant method for cybercriminals. Such attacks involve impersonating company employees to gain victims' trust, subsequently extracting sensitive information like private keys or login credentials. Adding to the atmosphere of vulnerability, hardware wallet provider Ledger experienced a data breach on January 5th due to unauthorized access to personal information of its users, including names and contact details. We at BlockSonic perceive that these incidents underline the critical importance of heightened security measures and awareness within the cryptocurrency ecosystem. As cyber threats evolve, the community must adapt and fortify against sophisticated attacks. How should the crypto community enhance its defenses to thwart future social engineering attacks? Join us in the chat to share your thoughts and become part of this crucial conversation. Senate Democrats poised for crypto bill revival, sparking industry buzz. Senate Democrats re-engage with crypto legislation, reigniting talks with industry leaders amidst confidentiality. Senate Democrats have re-entered the fray, reigniting discussions on shaping a comprehensive crypto market structure bill. On a recent Friday, they engaged with industry representatives in a call marked by keen interest in the next steps, as per insiders privy to the dialogue. Following an unexpected legislative pause that postponed the Senate's initial voting on the bill, Democrats are signaling their readiness to advance. Participants left the midday call with the impression that the Senate Agriculture Committee remains committed to its end-of-month deadline for a markup hearing. However, the specifics of the discussions remain under wraps, as industry representatives were advised against disclosing details. Democrats from both the Senate Banking Committee and the Agriculture Committee, crucial to the bill's passage, participated in the call. This occurred the day after the banking panel's scheduled first hearing, which was postponed. The draft legislation released this week faced substantial criticism, with U.S.-based crypto exchange Coinbase expressing its inability to support the current version. Currently, Senate Banking Committee Chairman Tim Scott has not set a new date for a markup hearing to deliberate on amendments and potentially advance the bill to the Senate floor. The Agriculture Panel's markup remains scheduled for January 27th, although industry experts are speculating about potential delays. Should both committees approve their respective bills, the banking version addressing the Securities and Exchange Commission's role, and the agriculture version focusing on the Commodity Futures Trading Commission, they will be merged into a unified bill for Senate voting, provided that the Senate's progress is not further impeded by imminent federal spending debates. The legislative window remains open. Nonetheless, the Senate's legislative bandwidth could tighten as the calendar approaches the August recess. The year's midterm elections further complicate bipartisan legislative efforts and disrupt the Senate's schedule as members pivot to campaign commitments. The crypto bill stands out as one of the few bipartisan ventures embodying a rare moment of political cooperation, with both parties seemingly eager to craft a passable legislative solution. We at BlockSonic understand that this political maneuvering highlights the intricate balance required to advance crypto legislation amidst diverse political agendas. In this evolving scenario, are we witnessing a genuine commitment to regulatory clarity, or is this yet another political chess move? Share your thoughts and join the conversation in the chat. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin and crypto assets plunge amid U.S. market decline. Crypto turmoil as Bitcoin and altcoins tumble in sync with U.S. stock drop. Bitcoin has descended to $94,300, a continuation of the recent sell-off that erased early week gains. Our analysis shows that, as of mid-morning in the United States on Friday, Bitcoin experienced a decrease of 1.3% over the past 24 hours, matching Thursday's decline. Ethereum has mirrored this trajectory, falling to $3,200, while the CoinDesk 20 index has dropped by 1.5%. Other cryptocurrencies such as XRP, Aptos, and Polygon have experienced losses ranging from 3 to 6%. The excitement earlier in the week when Bitcoin approached $98,000 has dissipated, leaving investors to reconsider their strategies. Many anticipated that Bitcoin could challenge the $100,000 mark. Instead, the cryptocurrency now appears more likely to revisit the low $90,000 range. This downward trend in Bitcoin coincides with a sharp decline in precious metals, with gold and silver dropping by 1.2% and 5% respectively. Additionally, major United States stock indexes, including Nasdaq, S&P 500, and Dow Jones Industrial Average, have shifted from early gains to losses. Despite the overall market downturn, crypto miners such as Riot, CleanSpark, Cipher Mining, and Galaxy have demonstrated resilience, enjoying gains from 5 to 10%. Driven by optimism surrounding artificial intelligence, infrastructure developments. We at BlockSonic understand that these developments reflect the intertwined nature of cryptocurrency and traditional markets. As Bitcoin and other digital assets navigate these turbulent waters, the question remains: will Bitcoin reclaim its ascent, or are further challenges on the horizon? Share your thoughts and join the discussion with us in the chat. Crypto cards revolutionize daily Bitcoin spending. Bitcoin's new payment frontier. Crypto cards transform transactions. In a groundbreaking shift for cryptocurrency, crypto credit and debit cards are revolutionizing everyday transactions with Bitcoin and stablecoins. Artemis research highlights how these cards are reshaping the financial landscape, with Visa seizing a majority share through its pioneering infrastructure alliances. Crypto cards, which enable users to spend Bitcoin and stablecoins at conventional retailers, are swiftly emerging as a dominant force within digital payments. According to Artemis's latest study, their volume is nearing the scale of peer-to-peer stablecoin exchanges. Monthly spending on crypto cards surged from approximately $100 million in early 2023 to over $1.5 billion by late 2025, marking a 106% compound annual growth rate. The study indicates this market now surpasses $18 billion annually, closely rivaling peer-to-peer stablecoin transfers, which stand at $19 billion and grew by merely 5% in the same time frame. Despite the rising interest in direct stablecoin acceptance by merchants, Artemis emphasizes that cards continue to serve as the primary conduit for stablecoin expenditures, as they do not necessitate new merchant integrations. Settlement processes native to stablecoins are increasing, yet remain in their infancy. Visa's stablecoin-linked card spending reached a $3.5 billion annualized run rate in the fourth quarter of 2025, accounting for about 19% of the total crypto card volume. The report reveals that in almost all markets, USDT leads stablecoin volume. However, India and Argentina stand out, with USDC usage nearing parity with USD at 47.4% and 46.6% respectively. Additionally, India has emerged as the largest crypto market in the Asia-Pacific region by inflows, with a $338 billion value in the 12 months ending June 2025, showcasing a 4,800% growth over 5 years. Artemis explains that the crypto card ecosystem largely relies on the same infrastructure as traditional Visa and MasterCard networks. Through strategic partnerships with crypto-native infrastructure entities, Visa captures more than 90% of on-chain card volume. We at BlockSonic understand that this evolution in crypto card usage signifies a pivotal moment for Bitcoin and stablecoins, marking their transition into mainstream financial activities. The question now is, how will this transformation influence the broader adoption of cryptocurrencies in global markets? We invite you to share your thoughts and join the conversation in the chat. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Riot Platforms reshapes crypto frontier with billion-dollar AI strategy. Riot Platforms Incorporated shifts its focus to AI, selling Bitcoin to fund expansions, eyeing a billion-dollar revenue stream through AIM partnership. Riot Platforms has joined the evolving wave of Bitcoin miners, adapting to the surging demand for artificial intelligence infrastructure, signaling a significant shift in their strategic roadmap. On Friday morning, the company revealed its acquisition of a 200-acre site in Rockdale, Milam County, Texas, on a fee-simple basis, costing $96 million. This purchase was financed entirely through the sale of approximately 80 Bitcoin from the company's reserves. Concurrently, Riot sealed a long-term data center lease and services agreement with leading semiconductor manufacturer Advanced Micro Devices, marking Riot's inaugural hyperscale data center engagement. The initial lease addresses 25 megawatts of critical IT load, with a phased introduction starting in January 2026 and culminating in May 26, utilizing retrofitted premises. This 10-year initial agreement is poised to generate about $311 million, with Advanced Micro Devices options potentially elevating total contract revenue to $1 billion. The press release noted Riot now owns and manages over 1,100 acres and 1.7 gigawatts of power capacity across its 2 Texas sites, which are separated by approximately 100 miles. Collectively, they establish a dominant position within the Texas Triangle, a configuration encompassing Austin, Dallas, Houston, and San Antonio. Riot Platforms saw nearly an 11% increase during active early Friday trading. We at BlockSonic understand that this strategic pivot by Riot Platforms not only highlights the intertwining of Bitcoin and artificial intelligence sectors, but also underscores the growing influence of technological convergence on Bitcoin. Mining operations. How will the synergy between Bitcoin mining and artificial intelligence reshape the future of digital currency investments? Share your thoughts and join the discussion in the chat. Bitcoin's bright future. Miners thrive as hash rate dips. Crypto miners soar into 2026, with gains in revenue and margins, boosting market outlook for Bitcoin. We at BlockSonic observe a promising start for Bitcoin miners in 2026 as market dynamics shift in their favor. A noted decline in hash rate has harmonized with rising Bitcoin prices, presenting a fertile ground for improved profitability and strategic expansion. As we analyze the landscape, it is evident that the surge in market capitalization among U.S.-listed Bitcoin miners, totaling approximately $62 billion, is a reflection of this trend. The 15% rise in Bitcoin prices, coupled with a 2% decline in network hash rate, has mitigated competitive pressures, allowing for enhanced revenue opportunities. From our perspective, the increased daily revenue per exahash and improved gross mining margins, now at 47%, highlight a recovery phase. The hash price, a crucial indicator of mining profitability, has risen by 11% since the close of December, further supporting this positive trajectory. In our exploration, we identify the diversification into artificial intelligence and high-performance computing as a pivotal strategy for miners, aiming to boost revenue streams beyond traditional block rewards. This pivot is essential for adapting to the evolving digital economy. Looking forward, the persistence of a lower average network hash rate could sustain higher revenue per computational unit. However, we recognize the need for continued efficiency improvements and prudent capital management to maintain momentum, as current revenue per exahash still lags behind figures from the prior year. Moreover, the substantial capacity increase by U.S.-listed miners, now contributing approximately 41% to the global network, underscores the strategic significance of these entities within the global mining framework. This expansion, led by industry leaders such as Bitdeer and Riot platforms, reinforces the role of publicly traded miners in shaping the sector's future. As we at BlockSonic interpret these developments, we see a constructive setup for Bitcoin mining in 2026, contingent on stable Bitcoin prices and further normalization of network conditions. The question we pose is, how will these evolving dynamics influence the broader cryptocurrency market? Share your thoughts and join the conversation in the chat. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin Cash surges, lifting the cryptocurrency index higher. Even Bitcoin Cash shine as top performers in the crypto world. We at BlockSonic present the daily market update, illuminating the dynamics within the cryptocurrency landscape, with Bitcoin Cash and AVE emerging as stars. The CoinDesk 20 index currently reflects a value of 2,985.7, marking a 0.3% increase, or 8.4 units higher since 4 p.m. Eastern Time on Friday, date year. Half of the 20 assets in the index are experiencing upward movement. Among the leaders, Bitcoin Cash boasts a 3.1% rise, while AV follows with a 1.4% increase. In contrast, the laggards include Polkadot with a 4.5% drop and Internet Computer with a 1% decline. This index represents a diversified gauge of the cryptocurrency market, traded across multiple platforms globally. We at BlockSonic understand that these shifts highlight the volatile yet promising nature of the cryptocurrency market, with certain assets driving the index upward while others face declines. What do these movements suggest for the future of cryptocurrencies, and how might they influence your perspective on digital assets? Share your thoughts and join the conversation with us in the chat. Quantum computing sparks crypto debate, Bitcoin or gold? Strategists' bold move puts Bitcoin's future in question. In a strategic shift, we at BlockSonic observe Jefferies strategist Christopher Wood replacing a portion of Bitcoin with gold, driven by potential quantum computing threats to Bitcoin's security. Christopher Wood, serving as Jefferies' global leader of equity strategy, has strategically withdrawn 10% of Bitcoin allocation from his model portfolio. His decision stems from concerns that advancements in quantum computing could eventually compromise the Bitcoin blockchain security, thereby diminishing its allure as a robust long-term value store. The change was documented in Wood's Greed and Fear newsletter, as cited by Bloomberg. The Bitcoin allocation was substituted with 5% to physical gold and 5% to gold mining shares. Wood had previously added Bitcoin to the portfolio in late 2020, increasing exposure in 2021 on the premise that it could rival gold amidst governmental fiscal stimuli. Currently, he is gravitating back toward assets with proven historical stability. The core concern revolves around Bitcoin's reliance on cryptography for securing wallets and authorizing transactions. Presently, no existing computers can realistically compromise these protections. However, future quantum machines might exploit quantum mechanics to deduce private keys from public data, potentially undermining Bitcoin's security. Bitcoin developers, including veteran Jameson Lopp, maintain that the quantum threat is not immediate. Lopp asserted in December that quantum computers will not imminently compromise Bitcoin, suggesting that protocol adjustments and fund migrations to new formats could span 5 to 10 years. Funding interest in this area is growing. Recently, Project 11 secured $20 million to develop post-quantum blockchain tools, including readiness assessments and migration tests. This indicates an acknowledgement of the potential issue, despite Wood's move not signifying an immediate quantum threat to Bitcoin. It illustrates, however, that long-term security concerns are beginning to shape investment strategies. We at BlockSonic perceive this shift as a reflection of evolving perspectives on Bitcoin's durability in a quantum computing future. Are you prepared to rethink your crypto allocations in light of quantum advancements? We invite you to engage with us in this discussion and share your thoughts in the chat. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Crypto dynamics, Senate delays, and ETF influxes shake market foundations. Prepare for impactful crypto moves as January 16, 2026 approaches. We observe the current landscape of major cryptocurrencies where two contrasting forces are at play: a United States Senate bill delay and rising spot ETF inflows. The Senate Banking Committee has postponed discussions on a crucial market structure bill, including a controversial proposal to ban stablecoin yield payments. This delay has cast a shadow over the industry, leading Coinbase Global to retract its support. Despite President Donald Trump's administration's pro-crypto stance, legal challenges persist, highlighting the complexity of regulatory hurdles. Analysts caution that failure to pass this bill could usher in a new crypto winter, reminiscent of the downturns experienced in 2022 and 2018. Conversely, the influx into United States listed spot exchange-traded funds has surged, signaling market optimism. This week, these ETFs have amassed a net total of $1.81 billion, marking the largest inflow since October. Analysts from Bitfinex interpret this as a sign of institutional re-entry and stable accumulation rather than speculative activity. Bitcoin's annualized 30-day implied volatility has dipped below 40%, its lowest since October 5th, indicating traders are anticipating an average daily move of 2.5% over the next 4 weeks. Bitcoin was recently valued near $95,200, reflecting a 1.6% decline over 24 hours. Major altcoins like Ethereum, Solana, XRP, and Dogecoin have experienced slightly larger losses, while the CoinDesk Memcoin Index has suffered a 3% drop. Sidra Farik, the global head of retail sales and business development at Deribit, notes that the market awaits a clear bullish catalyst for upward momentum. According to Farik, market sentiment remains cautious but optimistic as investors navigate macroeconomic uncertainties and anticipate improved liquidity conditions. In traditional markets, The dollar index has retreated from 5-week highs, and gold remains near its peak from earlier this week. Futures tied to the S&P 500 have increased by 0.3%, suggesting positive signals for risk assets. We at BlockSonic understand that the interplay between regulatory developments and market inflows is critical to shaping the crypto landscape. The balance between caution and optimism will determine the direction of future market movements. Will regulatory challenges overshadow the positive momentum from ETF inflows? Or will these inflows provide the bullish catalyst needed for a breakout? Share your thoughts and join the discussion in the chat. DDC Enterprises bold crypto strategy. 200 Bitcoin acquired. Bitcoin-driven shares surge over 5% as DDC Enterprise strengthens crypto strategy. We at BlockSonic observe that shares in DDC Enterprise, a prominent global Asian food platform, surged over 5% in pre-market trading, reaching $3.22. This growth follows the company's strategic acquisition of 200 Bitcoin, marking its initial Bitcoin purchase for the year 2026. DDC Enterprises' foray into digital assets underscores its commitment to a treasury strategy anchored in Bitcoin. This recent transaction elevates their total Bitcoin holdings to 1,383 Bitcoin, positioning it as the 44th largest publicly traded entity with such holdings. The company reported an average Bitcoin acquisition cost of $88,998 per Bitcoin, with a remarkable year-to-date Bitcoin yield of 16.9%. Additionally, DDC now holds 0.046482 Bitcoin per 1,000 shares outstanding, reflecting a strategic consolidation of digital assets. Founder, Chairwoman, and Chief Executive Officer Norma Chu stated that this acquisition signifies a deliberate and consistent capital deployment strategy, notwithstanding the prevailing market caution. We at BlockSonic perceive that this move by DDC Enterprise exemplifies a broader trend in corporate Bitcoin adoption. How do you see the role of Bitcoin in corporate treasury strategies evolving? Share your thoughts and join the discussion in the chat. Crypto sponsorships rev up with Nexo's new Formula One deal. Nexo dives deeper into the crypto sports arena by sponsoring the Audi Revolut Formula One team, following its recent Australian Open partnership. We report that Nexo, a prominent crypto lender, has inked a sponsorship deal with the Audi Revolut Formula One team, marking a 4-year commitment. This move extends their sports sponsorship endeavors just a month after they secured a partnership with the Australian Open tennis event. According to sources familiar with the details, the deal is valued at tens of millions of dollars. Within the 2024 and 2025 season, crypto exchanges have allocated $568 million towards sports sponsorships. Soccer remains dominant, claiming nearly 60% of new sponsorships. While the peak of crypto advertising occurred in 2021 and 2022, recent collaborations highlight a trend towards lasting brand integration, especially within high-end cultural sectors. Konstantin Rangelov, Nexo's brand marketing manager, shared in an interview, this multi-year agreement offers Nexo digital asset exclusivity, framed strategically for potential long-term extension. Nexo's branding will be prominently featured on the car livery, as well as on the helmets and sleeves of both drivers and pit crew members, embedding the brand within the team's visual identity. Nexo is now the 4th crypto entity to sponsor a Formula One team. Coinbase partnered with Aston Martin Aramco in early 2025. Kraken joined Williams Racing, and Bybit allied with Red Bull Racing in 2024. This partnership links Nexo with one of motorsport's most prominent platforms as Audi gears up for its inaugural Formula One entry in 2026. The team aims to leverage this partnership to engage global audiences through digital-first initiatives and exclusive experiences. Recently, Nexo also became the first virtual assets firm to sponsor a Grand Slam tennis event, establishing a 3-year deal with Tennis Australia. This includes branding rights at the Australian Open and other summer of tennis events such as the United Cup and Adelaide International. We at BlockSonic perceive that Nexo's strategic sports sponsorships are not just about visibility, but about embedding its brand in global culture through high-profile partnerships. As the crypto world ventures deeper into elite sports, we at BlockSonic wonder, could this trend redefine how digital assets are perceived globally? We encourage you to join the conversation and share your thoughts in the chat. Bitcoin's power play. Dash dominates amidst crypto calm. Bitcoin remains steady. Dash steals the spotlight with significant gains, showcasing intriguing crypto dynamics in a calm market session. In this tranquil session, we witness minimal movement across major crypto indexes, with all fluctuations below 1% as of midnight Coordinated Universal Time. This quietude underscores Bitcoin's stability, as it sustains its position above a critical breakout threshold of $94,500. This level was surpassed earlier in the week after Bitcoin's movement was restricted within a narrow trading range since November. Meanwhile, Zcash valued it at $401.47, Aptos at $1.08,761, 0.10 of a dollar, and Polygon all experienced slight downturns. In contrast, Dash priced at $75.26, a token prioritizing privacy and payments, has continued its impressive annual start by increasing 15%, culminating in a remarkable 141% rise over the previous week. The crypto market now anticipates its next catalyst as geopolitical unrest in Iran and Venezuela revives the safe haven narrative of cryptocurrencies. This situation illustrates a divergence with United States equities, which have not matched the performance of Bitcoin and Ethereum this week. We at BlockSonic understand that these movements present a fascinating interplay between stability and unexpected surges in the crypto universe. This session invites us to ponder, how will these geopolitical factors continue to shape the crypto landscape? Share your thoughts and engage with us in this ongoing dialogue. Crypto fraud. A dark turn in Utah with millions lost. A Utah man's crypto fraud leads to a 3-year prison sentence as cryptocurrency scams skyrocket, risking millions. In the shadows of southern Utah, a man has been sentenced to 3 years in federal custody for orchestrating a wire fraud scheme that deceived investors out of millions, cleverly converting large sums of cash into cryptocurrency through an unlicensed operation. This case reflects a growing trend where digital assets become tools for financial deception. We at BlockSonic interpret this as part of a broader pattern. The Federal Bureau of Investigation underscores its commitment to protecting victims, holding offenders accountable, and pursuing those who misuse cryptocurrency and unlicensed financial services. Special Agent in Charge Robert Bowles emphasizes the agency's dedication to combating these emerging threats. The sentence arrived shortly after a report from Chainalysis disclosed that $17 billion in cryptocurrency vanished due to scams globally, amplified by advanced impersonation tactics, social engineering, and AI-generated schemes. Brian Gary Sewell, aged 54, received a sentence of 36 months imprisonment, followed by 36 months of supervised release. Sewell pled guilty to wire fraud, having manipulated victims between December 2017 and April 2024, falsely promising substantial returns and siphoning more than $2.9 million from at least 17 investors. Furthermore, Sewell operated Rockwell Capital Management as an unlicensed money transmitting business from March to September 2020, converting over $5.4 million into cryptocurrency for third parties, including individuals involved in fraud and drug trafficking. He charged significant fees for these illicit transactions. U.S. District Court Judge Anne Marie McSiff Allen ordered Sewell to pay restitution exceeding $3.6 million, including additional amounts to the U.S. Department of Homeland Security. We at BlockSonic perceive this as a cautionary tale for the crypto community, highlighting the vulnerabilities that can be exploited within digital finance. As we witness this unfolding narrative, we ask, how can the crypto community enhance safeguards to prevent such exploitation? We invite you to share your thoughts and join the discussion in the chat. Bitcoin Management Revolution, 2 Prime's $250 million move. A new era for crypto investment. Institutional Bitcoin strategies on the rise. In what signifies a transformative moment in the cryptocurrency landscape, we see digital wealth partners selecting 2 Prime to oversee a substantial $250 million Bitcoin portfolio. This decision underscores the burgeoning trust in specialized cryptocurrency management as demand surges for expertly managed digital asset strategies. 2 Prime stands at the forefront, offering institutional investors Bitcoin-focused financial services. Catering to a diverse clientele ranging from family offices to corporate treasuries and crypto miners, they merge quantitative investment methodologies with Bitcoin-specific risk mitigation. Notably, their lending division ranks among the largest Bitcoin-secured lenders on a global scale. This strategic collaboration highlights the increasing reliance on specialized Bitcoin managers, marking a pivotal point in the evolution of digital asset investment frameworks. As adoption widens, investors are no longer merely seeking Bitcoin exposure, aligning with traditional asset class standards. The expanded mandate fortifies the existing alliance between the 2 firms, to be executed through a separately managed account structure, specifically engineered to deliver low volatility, Bitcoin-denominated returns. We at BlockSonic understand that this development is emblematic of the growing institutional acceptance and sophistication within the cryptocurrency asset management sphere. It signals a shift toward more structured and professionally managed crypto investment avenues. How will this trend redefine the landscape of Bitcoin investment management? Join the conversation and share your insights in the chat. Thank you so much for following BlockSonic today. See you in the next live session with more news, analysis, and market alerts. Don't forget to follow our channel and turn on notifications. See you soon. Keep an eye on Bitcoin and continue listening to the sound of the blockchain.